All right, let's talk about something that's on a lot of people's minds. You've got Bitcoin, but how do you actually turn it into, cold, hard cash you can spend? Let's get right into it. So maybe you've hit that investment goal you set for yourself, or maybe you just need the funds for a big purchase. Whatever the reason, you're ready to make that move from the digital world to the real world. But how do you actually do it? And more importantly, how do you do it safely and without any headaches? At its core, cashing out is really just a fancy way of saying you're selling your Bitcoin. It's that final step where all those numbers on a screen become real spending power in your bank account. It sounds simple enough, right? But hold on, because there's a really big decision you have to make right at the very beginning. And I'm not exaggerating here. I mean everything. The platform you pick is going to decide how fast you get your money, how much you're going to pay in fees, and even how much privacy you have. Seriously, this isn't some small detail. It's pretty much the most important choice you'll make in this whole process. So, okay, let's lay out the options. You've basically got three main roads you can go down to get your cash, and each one is built for a totally different person with different priorities. Think of them like different ways to get to the same destination. Let's break this down with some analogies. A centralized exchange, that's kind of like the New York Stock Exchange, but for crypto. It's formal, regulated, and super reliable. Then you have peer-to-peer, or P2P. Think of this more like Craigslist or Facebook Marketplace. You're dealing directly with another person. And a Bitcoin ATM, that's the 24/7 convenience store. You can get cash instantly, but man, you are going to pay a premium for it. And here are the hard numbers. This table really shows the trade-offs. An exchange gives you that nice balance of reliability and pretty reasonable fees, but it's not instant. P2P gives you way more control, but the timing can be all over the place. And the ATM, well, you get your cash on the spot. But just look at those fees. Ouch. And wow, this chart really drives the point home, doesn't it? Look at that giant bar for the Bitcoin ATM. We're talking average fees around 15%, sometimes even as high as 20%. When you compare that to the tiny little sliver for an exchange, it's a massive difference. You are paying a huge, huge premium for that speed. So here's the bottom line. There is no single best way to do this. The right choice is all about your goals. What do you care about most? If you're moving a large amount and security is everything, an exchange is probably your best bet. If you want total control over the deal, P2P is where it's at. And if you need a couple $100 in your pocket, like right now, well, the ATM is there. If you can stomach that fee. Okay, so let's get practical. We're going to walk through the most common path that people take. Cashing out using a good old centralized exchange. It's really just a four-step dance to get from your crypto wallet to your bank account. First up, you've got to prep your account. That means doing the Know Your Customer, or KYC verification. It's a regulatory thing, and trust me, you don't want to wait to the last minute to do it. Step 2, deposit your Bitcoin from your personal wallet onto the exchange. Step 3, you place your sell order. And finally, Step 4, you withdraw that sweet, sweet cash to your bank account. Now that second step, depositing your Bitcoin, can be super nerve-wracking. We've all been there, right? Staring at that long string of letters and numbers, double-checking it a dozen times. Here's a pro tip. Send a tiny test amount first. Seriously, just a few bucks. Once you see that land safely in your exchange account, you can send the rest with total confidence. It's a small trick that buys you a whole lot of peace of mind. All right, you did it. You made the sale. But what you see isn't always what you get. We need to talk about the part nobody really likes, but everybody has to deal with. All the little tolls and taxes on your way out. So, there are three main fees you've got to keep an eye on. First, the trading fee. That's the exchange's cut for handling the sale. Then, the withdrawal fee. That's what it costs to send the cash to your bank. And finally, the network fee. That's the minor fee you pay just to move your Bitcoin onto the exchange in the first place. Yep, they all add up. And then there's the big one, the one you absolutely can't ignore. Taxes. Let's be crystal clear about this. If you sell your Bitcoin for more than you paid for it, that profit is almost certainly a taxable event. That's capital gains tax, and the government wants its slice. And the stakes here can be absolutely huge. I mean, just think back to the wild ride of 2017. Some folks saw gains of over 1,300%. That is life-changing money, for sure. But it also comes with a life-changing tax bill if you weren't ready for it. So what's the takeaway? Keep meticulous records. I can't stress this enough. You have to know what you paid for the Bitcoin you're selling. That's called your cost basis. Track every single purchase, every sale, every date. It is absolutely non-negotiable if you want to do your taxes right and avoid a giant headache down the road. Okay, let's move into our final section, and it's a crucial one. We've talked about the how and the how much. Now let's talk about how to protect it. Security isn't just a nice to have, it's everything. Before you do anything, just run through this little checklist in your head. Is your password strong and unique? Have you turned on two-factor authentication? Please say yes. It is your single best line of defense. Are you being super skeptical of any official-looking emails? And please, please, never make these kinds of transactions on public Wi-Fi. But look, if you only remember one single piece of security advice from this whole thing, let it be this one. Do not, I repeat, do not move your entire crypto savings to an exchange all at once. Just move the exact amount you plan on selling and leave the rest safe and sound in your personal wallet. This one simple habit drastically lowers your risk. So there you have it. You know the different paths you can take, you know about the fees and the taxes, and you know the safety checks to keep in mind. You've got the complete map for turning your digital assets into real-world cash. So the only question left is, what are you going to do with it?